Hello, trustees. My name is Lupe Garcia. I'm a partner with Whitley Penn. My presentation will take you through the audit results for fiscal year 2024 of the district's financial statements and the federal single audit. The audit process itself takes several months to complete. It began early in the spring with preliminary discussions with the district and planning. The first phase of field work involves obtaining an understanding of the district's internal controls, which are its processes and procedures over the areas of the district that materially impact its financial statements. That includes human resources, payroll, purchasing, accounts payable, information technology to the extent that it impacts the district's ability to track transactions throughout the year and to provide and produce timely and accurate financial statements at the end of the fiscal year. And we also identify the district's major programs during this phase of field work and perform the compliance testing over those major programs. Once the district's fiscal year is over, we then perform our substantive audit procedures, which are more financial in nature. We're confirming balances directly with your financial institutions. We're performing a variety of analytical procedures, obtaining audit evidence to support our opinion on the district's financial statements. To give you an idea of the critical areas that impact the audit, I mentioned some of these already. Also, we focus on attendance because that does drive state funding and the district's financial close and reporting procedures for its ability to produce the annual comprehensive financial report. So over many of these areas, we select samples to test that the transactions are properly approved and supported, and to ensure that the district is following all applicable laws and regulations and local policies. As external auditors, we can express one of three different types of opinions. I'm happy to report that our opinion on the district's financial statements for fiscal year 2024 is an unmodified opinion. So within the annual comprehensive financial report, at the beginning of the financial section, you'll find our letter on firm letterhead and firm signature, and in the very first paragraph, we'll state that the district's financial statements are fairly stated in all material respects and that our opinion is unmodified. We also issue a second report on the district's compliance and on internal controls over financial reporting. Our audit procedures did not identify any material weaknesses or significant deficiencies, nor did we identify any material noncompliance to the financial statements. The third and last report we issue is on the district's administration of its federal programs. For fiscal year 2024, we tested three major programs that included ESSER, Title I Part A, and Title II Part A. Each of these programs have compliance requirements that are direct and material and applicable. We tested these major programs in accordance with these compliance requirements, and the district is materially complying with the requirements. We didn't identify any question cost or any non-compliance. So here our opinion is also unmodified on the district's compliance with each of these three major programs. Jumping to the financial statements themselves, the government-wide statement of net position is the district's balance sheet on an accrual basis of accounting. So this reports all the assets and liabilities of the district, similar to a company in the private sector. So the assets and deferred outflows of resources totaled $4.9 billion. Of that balance, that primarily consisted of your cash investments of $2.6 billion and capital assets netted depreciation and amortization of $2 billion. That's your land, your construction in progress, your buildings, furniture, equipment, and vehicles, all net of depreciation and amortization. Your liabilities and your deferred inflows of resources totaled $4.5 billion. Of that amount, that's primarily comprised of your outstanding bonds payable and related premiums of $2.9 billion. You have amounts due to other governments, $661.9 million. That's amounts due to the state of Texas related to recapture. And then you have two liabilities you report for your participation in the teacher retirement system in Texas, the net pension liability and the net other post-employment liability, or OPEB. The net pension liability was $297.8 million, and the net OPEB liability was $137.3 million. Both of those amounts are calculated by TRS and their auditors and actuaries. The district takes that information every year and brings it into their report. The net position is the difference between your assets and your liabilities and your outflows and your inflows. And that totaled $431.8 million as of June 30th, 2024. The general fund is the district's main operating account. For fiscal year 2024, the district reported $1.5 billion in general fund revenue. 90% of that comes from property taxes, $1.352 billion in property tax revenue. The remaining 10% of general fund revenue comes from a variety of sources. You have other local funding, $51.4 million, which is primarily interest income. You do record some federal funding in this general fund of $17.5 million. TRS on behalf is $48 million, state aid $32.9 million, and other state funding rounds out the remaining revenues in the general fund. General fund expenditures during fiscal year 2024 totaled $1.5 billion. Of that amount, 43% represents recapture. That was $664.8 million for fiscal year 2024. 34% is related to instruction and instruction-related services, $528.6 million. Your student support services, $115.1 million. That's primarily guidance, counseling, student transportation. Facilities maintenance and operations is 5% of the general fund expenditures. Instructional and school leadership is also 5% of your general fund expenditures, followed by security, monitoring, and data processing, general administration, which are each 2%, as well as your other miscellaneous expenditures in the general fund. This illustration shows you what recapture has looked like the last 3 fiscal years. Recapture for fiscal year 2024 was $664.8 million. You can see that's a decrease from the prior year when it was $900.9 million, and you're retaining a greater percentage of your property taxes beginning with fiscal year 2024. You can see that percentage is 50.9% compared to 42.6% and 46.5% in the prior fiscal years. I do have a note here at the bottom that for fiscal year 2025, the district does have in its budget to send $821.1 million back to the state in the form of recapture. The annual comprehensive financial report includes 3 budget to actual schedules. The first one I'm going to discuss with you is the one concerning the general fund. Your revenues were greater than final budgeted revenues by $7 million. Your actual expenditures were less than your budgeted expenditures by $26.1 million overall. Expenditures exceeded your revenues and other sources by $58.8 million. That indicates that fund balance in the general fund decreased during the fiscal year by that amount. Ending fund balance at the end of the fiscal year totaled $260.9 million. That is reported in 3 different categories. You had $300,000 of fund balance that was reported in non-spendable, which is fund balance that's in prepaids and inventory. You had assigned fund balance of $18 million, amounts earmarked by management for particular purposes, and then anything not in those categories is reported as unassigned fund balance, and that was $242.6 million. That $242.6 million represents 27.4% of your expenditures. Now, in the district's CE local board policy, you do have a requirement that your unassigned fund balance should not equal less than 20% of your combined budgeted expenditures of the district's general fund. And this is with excluding your Chapter 49 recapture expenditures. So you can see here that for fiscal year 2024, you did exceed 20% per your board policy. I've also included the 4 previous fiscal years so you can see what that looked like in those years where, again, you did exceed the board policy of 20%. The second and third budget to actual schedules are for the breakfast and lunch program and the debt service fund. Your breakfast and lunch revenues were less than budgeted revenues by $900,000. Expenditures were less than budgeted expenditures by $27,000. Overall, fund balance in the breakfast and lunch program decreased by $1.8 million for an ending fund balance of $8.6 million. Your debt service fund is the fund where you record the interest and sinking portion of your property tax revenue for the repayment of principal and interest. Actual revenues of $242.1 million were greater than your budgeted revenues by $5.3 million. Expenditures were less than budgeted expenditures by $100,000. Overall, an increase in fund balance in the debt service fund of $68.2 million for an ending fund balance of $243 million in the debt service fund. This was the balance at June 30th, 2024. You needed this balance to make your next debt service payment, which occurred a few months after the fiscal year ended. I will end my presentation going over required communications. As part of our audit, we did review the district's significant accounting policies. The district is following all current accounting pronouncements. There were no new pronouncements that the district had to implement in fiscal year 2024. It's important to note that the financial statements do include accounting estimates. Some of the more significant accounting estimates include state funding. There's many variables that determine ultimately what the district receives in state funding, what the district pays in recapture, so we consider that a very significant estimate to the district's financial statements. Allowances for uncollectible taxes receivable is based on historical collections. And lastly, anything related to the district's participation in TRS for pension and retiree health care is the largest estimate in your financial statements. We've concluded that management has recorded these estimates in its financial statements in accordance with generally accepted accounting principles and has a reasonable basis for making these estimates and disclosing them in the financial statements. Every financial statement audit includes significant risk. Management override of internal controls and improper revenue recognition are two significant risks that we perform procedures to address. This is not unique to Austin ISD, but again, these are significant risks that are present in every financial statement audit. As members of the board, it's important for you to realize that these are risks that you should always keep in mind and be aware of, but we do perform procedures to address these two risks as a part of the financial statement audit. I'm happy to report that we didn't have any difficulties in performing and completing the audit, so I would like to thank the district, its management, administration, and staff for their cooperation through each phase of the audit. We do ask for a tremendous amount of information. We ask to meet with individuals and they're made available to us. We have questions and we select samples and have document requests. Everything was provided in a timely manner and our questions were answered in a timely manner. So we do appreciate their district for their cooperation and patience throughout the audit process. As a result of our audit procedures, we did not identify any material misstatements that we had to bring to management's attention. No disagreements with management when it comes to any accounting principles or accounting estimates. We do obtain a management representation letter at the end of the audit. In that letter, management represents to us that they've been an open book. They've provided us with all the information we've requested. Nothing's been withheld that would materially misstate the financial statements or need to be disclosed in the financial statements. As far as we're aware, the district is not consulting with other auditing firms on any accounting and financial reporting related matters. And lastly, during the year, the district may ask us questions, may ask us to provide guidance, but at no time do we feel the way we answer or the position we take on any matter is a condition to our retention as the district's external auditors. That concludes my presentation over the audit process, our opinions that we expressed on the financial statements and the federal single audit. I went through the financial statement highlights, both the government-wide and the fund financial statements, including the results of the budget to actuals comparisons. And then lastly, I ended with the required communications. If you have any questions, please reach out to management or myself, and I'd be happy to answer those questions for you. Thank you very much.